All right, so inflation's coming down, fixed rate mortgages are coming down, buyers are coming back into this market. My phone's ringing off the hook, I can tell you that. And I think you could be running out of time if you're not in this market right now. Stick around to the end to find out why. I'm 𝐎𝐕𝐈𝐃𝐄𝐒. I talk about Canadian real estate and my local market here in Abbotsford and the Fraser Valley. I post every Tuesday, Thursday, and Sunday. And if you get any value or entertainment from these videos, please subscribe so you can see more videos just like them. And like this video so I can get this video out to more people just like you who like this video. And hey, if you want to chat about buying or selling here in my market, you can scroll down, click on that link in my description, and book yourself right into my calendar for a time that's convenient for you. So time and time again, the market has done this, and time again, people had thought that the market was going to get much worse, prices were going to keep going down, causing them to wait and not act, or possibly signing another year lease in their rental apartment or whatever it may be. And then the price reversal starts, and what they want to buy isn't available, or they're locked into a lease or whatever, and they get left on the sidelines as the Vancouver real estate market starts rocketing upwards. Or by the time they jump back in, they're in, subject-free, multiple offers, going after ask, and they lose 17 times until the prices are 20% higher. And I believe we are in a current time period in the market where if you are not in it, you are playing with fire. Now I understand that the market could get much worse, it could crash, interest rates could go to 10%, World War III could start. However, when is the market crashing not a risk? When has that ever not been a risk? The market is always at risk of crashing, and 2020 is a perfect example of that. Everything's fine, market's chugging along, nominal rate of growth year over year, and then suddenly, boom, pandemic, market crashes out of nowhere. Worst crash in the history of ever. So you can't tell me that the market isn't always at risk of crashing. And here's the thing, right? Investing is a probability game. You always want to take picks where the risk to reward ratio is ever so in your favor. Yes, the market could crash, but what if it doesn't? What if rates come down within the next year, inventory is still low, price reversal? What if the market only comes down 2 to 4% in the next year instead of 30% like people are talking about? Now you may argue that, well, why don't I just buy if it goes down another 2 to 4% then, right? It'd still be cheaper, I'd still be winning if I wait. Well, what if you want to buy isn't available another 2 to 4% from here? And not only that, then you would be trying to time the bottom, which is statistically extremely improbable. So let me get to it. If you're an investor, yes, there's an argument to be made that, you don't have to buy real estate right now because you could go get another higher return elsewhere, right? Now, if you live here and you don't own any real estate here, I think the risk to reward at this point in the market cycle is working against you. Fixed rates as of late have come down quite substantially, as I talked about in a video that I'll leave up here. But basically what's happening is that as the Bank of Canada has continued to raise interest rates, the inflation expectation has gotten better. Because the inflation expectation has gotten better, investors have bought bonds, which pushes up the price of bonds, which pushes down bond yields, which subsequently makes fixed rate mortgages cheaper. So now we're at a point in the market where even if the Bank of Canada continues to raise rates, fixed rate mortgages may actually continue to get cheaper. Not only that, immigration is at an all-time high, and the amount of homes that we are building has substantially slowed down because it's just not very profitable for developers to build. So here's what this video is all about. If you can afford to pay the mortgage, if you have the means to buy, you have the down payment, you can afford to make the mortgage payments, I personally think you're not only making a good bet, but a safe bet by buying in the market right now. Right now, if you are truly worried about it, you could just get a 5-year mortgage, you can afford that mortgage payment. Let me tell you this, let me ask you this, what do you think the probability is that housing prices will not only be lower than they are right now 5 years from now, but interest rates will be higher than the rate that you're taking it out at today? Probably extremely small. I think most people would agree, maybe prices would be lower, but the interest rate is definitely not going to be higher. I think most people would agree that the probability, if you can afford to make those mortgage payments, that you're going to be in a better position when that renewal comes up 5 years from now is much, much higher than the opposite happening. And if you live here and if you don't own something, sure, values could keep going down, sure this, but you can buy in a way that you are protected and you're in the market. And by not being in the market and all of these negative things don't happen, if the market starts going up again and inventory is still low, rates are coming down, consumer sentiment returns, and now you have to try to jump back into the market and chase it up in multiple offers and low inventory, and it would it could make for a very messy situation for first-time home buyers, for people that just don't own anything here. So in my opinion, the risk to reward right now is favoring buying in this market. Now, obviously, I'm a realtor. I can see the comments already. He's just trying to get you to buy. Investing is all about risk to reward. It's all about probability. And I think there's a bigger risk in not owning in the market than there is owning in the market, because at least if you own in this market, you can protect yourself. You have recourse. You're good for 5 years. 5 years from now, interest rates will likely be lower. You probably progress in your career. You'll be fine for the most part. But if you don't own, you're really taking a gamble that this one scenario has to happen, and if it doesn't happen, then I'm screwed. Like, even if you had to buy a high-rise condo that doesn't complete for 4 years right now, you don't even need to pay the mortgage for 4 years. So anyways, that's my 2 cents. I personally think the risk to reward ratio at this current time in the market cycle heavily favors the first-time home buyer that isn't currently in the market. If you enjoyed this video, thumbs up, subscribe. You can book a call with me down in that description link. Book yourself right in my calendar, and we will see you guys on the next video. Peace.